Welcome traders to this video analysis on Mondays where we take a look at the euro dollar, pound dollar, dollar yen, and AUD USD. First of all though, I have to explain that this is intended for a global audience and may not be suitable for all attendees. Please check admiralmarketsglobal.com, select your country residence, and contact an appropriate entity to find out more information. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this video analysis is for educational and informational purposes only. Thank you for your attention on these disclaimers. This week's Forex webinar lineup for free at Admiral Markets consisting of weekly FX recap, and of course the expert advice on fundamentals with Nanette. Then Tuesday, Wednesday, Thursday we have live trading labs in the morning, and to round it up, Thursday evening we have why swings are vital in Forex trading on the 25th. Hope to see you in one or all of these webinars. The first pair on the list is the euro dollar. We're looking at the weekly chart, and after the break of the rising wedge chart pattern indicated by the green lines, we've seen a tremendous bearish momentum basically take place. And if you look at the most recent weekly candle, yet another very bearish close very near the low. So that momentum is continuing, and therefore any move up, I would say, is still a potential retracement of that weekly bearish candle for more downside. Therefore, last week's high, a very important level to keep an eye on. That's the 130 level. A break of that would, of course, change the character that the euro dollar has at the moment. So 130 key level, last week's high. And if we then zoom into lower charts, you can see though that there is a bit of a struggle. Although the weekly candle closed very strong, I would say there is a bit of a struggle here on maybe the 4-hour chart, where you can see prices kind of making a falling wedge on this time frame. So a bit of a slowdown in the downside speed we're seeing, and we'll have to see how price reacts to, for instance, 129 and the 130 resistance levels if we do find here some downside. We have divergence, for instance, between these 4-hour bottoms. So I'm a bit cautious with the euro dollar at the moment. Obviously, it could still be an upside for more downside, and we could see a retracement and a follow through. But because of the divergence and this falling wedge pattern, I am still cautious, and we'll keep an eye on how price action responds to the 129 and 130 level on the 4-hour and daily charts. The pound dollar is different. It actually had a big wick on top and ended a bit bullish instead of the euro dollar, of course, ending very bearish. So a significant difference on the weekly candles between euro and pound dollar. However, pound dollar too in a downtrend, momentum after it broke this support line to the downside, and price has been falling very nicely. Is it now going to continue with that downtrend? For the moment, I would think so, unless it really starts to break above last week's high. Yet again, a very important level around 165.25. That would be the line in the sand. If it breaks above then above that level, then of course it's something else is going on, and maybe we'll have more bullish momentum to retrace part of this swing, for instance, and go up to the higher fib. In the meantime, though, if we don't break last week's high, we can zoom in, then we can see a pretty strong bearish candle right in here on the daily chart. That looks like a pretty hefty bearish price action. So at the moment, I would say that this is more looking like an upside retracement, followed after this strong momentum, in fact, and we see a retracement for more downside. It seems more likely than anything if you look at the daily chart here. What point would be interesting to look for shorts? In my opinion, at least, in my humble opinion, I think that a break of this trend line, for instance, would be pretty interesting, because it would signal the most likely end of this upside correction that we've seen so far, and then price could fall and continue with that downtrend we've seen so far. AUD USD also in a strong bearish momentum after it broke out of this triangle consolidation indicated by green. Last week, 2 weeks ago, we had a very strong bearish weekly candle. Last week, we also had, again, a close near the low. Not as strong as 2 weeks ago, but still indicating follow through on that momentum to the downside. And the next bottom is all the way down at 86.70-ish. So there's still some space to the downside. And if we look at the daily chart, I would say any retracement back of this last week's candle, for instance, shouldn't break last week's high. and any upside here probably will find some resistance for more downside. We do have a bit of divergence, slight divergence between these bottoms on an hourly maybe, so we could see therefore maybe some retracement, but I wouldn't expect much of a retracement before we get followed through. So would even feel comfortable putting a fib on this hourly chart like this, and the 90 level, for instance, psychological round number could also, and these tops could also be a turning spot. That's where I would be looking for price action signals to confirm that potential. Last but not least, the dollar yen, also very strong trend going on. Dollar remaining in control, however, just like in the euro and the pound, just like the euro and the Aussie, but not the pound. And we see that the dollar yen is having 1 week after another with strong bullish candles. Last week too, in fact. However, one thing that I'm very cautious of is the 110 psychological resistance. We're pretty close to that, so this week could still maybe see that push up, but then after we hit 110, a bit of a pause would not be strange in my opinion. So maybe the space to the upside somewhat limited. Well, that wraps up my video analysis. Check out Admiral Markets, of course, platform and their social media and follow them. So glad that you can join us today and wish you all good trading. Hope to see you in the webinar soon. Cheers.